Hello, and a massive hello to everybody. How we all doing? Hope everybody's having a great day, great Sunday, great weekend, wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling, 13th of November, 2016. Here we go. So no trade calls, recommendations, or responsible stuff. Busy week ahead. We've got an awful lot on the data counter. We have something interesting pretty much every day, right? Starting on Monday, we've got that GDP out of Japan. We got industrial production out of China. We got Draghi speaking. We got retail sales out of New Zealand. By the way, heartfelt condolences to anybody in New Zealand. Terrible news with the earthquake there. Let's hope it doesn't continue. In terms of Tuesday, we've got German GDP out. We got RBA on the wires. We got CPIs out of UK. Inflation report hearings. A lot of data out of the US. GDP price index on Wednesday. We've got man sales out of Canada. We got PPIs. We got crude oil inventories. We got a bunch of stuff all over the place. Thursday, we've got unemployment claim change out of Australia. We got retail sales in the UK. We got a bunch of data with the Philly Fed weekly jobless numbers out of the US with the CPIs too. It's going to be very interesting. And then on Friday we got Draghi speaking, FOMC speakers. We got CPI. So there's a lot of stuff going on, right? So what's going on is we're trying to see how the cookie's going to crumble post the election, right? So bonds pretty much in play. We discussed this, we've been talking about this for a long time, right? So not to bore you, but we expected this to be a generational high, big sell-off, and we're expected to move back into this area into election week. And again, we said that's probably going to be an interesting place for it to probably try and bounce, and for at least for shorts to scale out or flatten out on your shorts, right? So I think nobody could have really expected the severity and the aggressiveness of the move here, at least all in one go, right? So as far as we're concerned, we're flat on our shorts, bond shorts into that zone, as we said. And right here, we'll have to see how the week goes. As usual, healthy markets do not only move in one direction, right? So the more this continues, the more you'd expect to see some kind of a healthy bounce. Now, maybe simply because everybody's waiting for this bounce, it's not going to happen so quickly. But right here, you clearly, the way we look at the market, you clearly can't get short here. So if anything, you'd be looking for some kind of tactical shorts. And you see, very nice. We talked about this zone here that we expected down if it couldn't get above the 166s. We had the nice little move back into there, and then bam, sell off. So here going to the week, I'd expect that in terms of this, 155 into the 153s, this to be a very tradable bounce kind of zone. And then you'll want to see what happens. Remember, you're going to have the 100 weekly coming in here. So, expect bounces to be shallow as this stays fairly heavy, but clearly here the risk is for some kind of upside correction. But this could continue to be very, very heavy, right? Very, very heavy. There's no real reason for this to bounce aggressively. The other thing which is particularly interesting, yen moves in play, right? EURUSD, we'll have to see how this settles, but we're still looking for this to make its way back into the 118.60s. So no change here. And possibly the most important one, and most interesting one, is USDJPY, right? So we've been discussing this chart for an awful lot of time. We're discussing the fact that all this zone here was a buy zone for the move back into 107s, 107.50 higher, right? And we said that into the election week, into the election, whatever happened, right, we expected the path of least resistance to be higher, and we'd expect any move back into the shaded area to be a nice buying opportunity for the upside to resume. So, you can classify this as pretty much gift for the gods in terms of that move back in the zone and back higher. Here, a lot of people have been talking about 107 option expiry. The way this is trading, I think it would be, I don't like to use surprising, but I think the odds are that we will take out that level sooner or later. I wouldn't be trying to short this with a very, very tight stop here. Going into the week, what's important is 105 to the downside support, 107.50, 107 mid, 110.50 mid-range. If we clear 107.50s here, right, and we start to hold above, we'd expect the path of least resistance into the end of the year is to try to make a stab back into the 110s. if we start going sideways, if we don't move, if we can't, and we start getting some sellers, we start to get daily closes below the 107, then we'd expect those 105 50s to come into play. And unless we get any tape bombs, you know, we might be hovering around in this range for quite some time. So let's wait and see what happens there. Now, quickly on Forex, right? Aussie, we said any move back in that area for us is a sell for a move back down at the 100, 200. So quite nice in terms of move. Kiwi, quite nice. We also discussed it was all about that rate decision. We'd expect it to, even if it tried to pop higher, for it to get sold and come right back down. So again, this is a very nice setup here. This is important support. You'll have to see how this trades. Again, we'll have to see the implications of the earthquake. It's a tricky call here, but to the upside now, 72.70s is resistance, and support is going to be this 200 bottom of the channel coming in here, you know, 69.80s. If those let go, then, you know, you'd expect to see this start to move aggressively towards the 67s. So right here going into the week, I'd talk about, you know, upside resistance, 72s, 72.70, 72, 73s, right here hovering, and to the downside, you know, 69.70s. That's the level to the downside. But again, likely to trade fairly heavy. Euro, as we said, you know, if anything on the move down, if it was going to bounce, this was a nice place for it to bounce. We've been discussing about this 112 for an awful lot of time, how that was pretty much the pivot for the year. You know, we've been hovering around there so long, but we got that ramp up and bam, sold heavy. You know, this has been trading equities down, euro up, equities up, euro down. So that's the way it is now. So we'll have to see what happens. Clearly, if we start trading below the 108, you'd have to expect the 107s to come into play fairly quickly. If those break, then you'd have to expect 105s to come into play quite quickly. So here, pretty much look at equities, right? So if equities continue to rip higher, then you'd expect this to try and make take a stab back to the 107s. If we get a little pullback on the equities, then expect this to bounce, possibly even into the 110.50s, but you'd expect sellers to come into that zone. Okay. Cable, what's going on cable? Cable, fairly nice trading the other day. So we had this strong breakdown zone, and you see how we've slowly made our way all the way back into this level. This was our key bull bear lines. We've had these on the chart for an awful lot of time, right? 126.58s. And you see what happened on Friday. You know, we had a pure little move right back into that zone. Nice rejection, actually repeated rejection, and then a move off. So that was very nice little trading opportunity. So we'll have to see how this trades here, but clearly, as long as those highs we printed on Friday hold, we would not be surprised to see a fairly decent retracement here, right? Fairly decent correction, and that correction, you know, could come anyway, but possibly, you know, even all the way back into the 124 50s. If you look at this whole kind of move up, you know, you've got those 123.70s coming in further down, but we'd expect it to be a fairly take a fairly decent stab at a correction. If it could get going, you know, that could, and you know, depending on what comes out of Brexit, etc., that could be a nice swing high. But clearly, beautiful little shorting opportunities there. Now, getting back to serious stuff, right? What's going on the equities? So on the equities, there's you know, there seems to be a little issue, right? And the issue is that basically Russell is saying we're going sky high, right? Sky's the limit. We've got the Dow, which is holding bid, right? And we've got the ES and the NASDAQ, which not so much, right? So I don't want to get into a big, there's fairly clear assumptions based on Trump why, you know, small caps, why domestic companies would be a lot more bid, why the NASDAQ, so tech stocks would be sold, etc., etc. But let's just look at the charts. So here the big question is, which is leading, right? Or is one leading the other? So I think here in terms of Dow, there's clearly very little to do, right? There's clearly very little to do, because after you've put in such an aggressive range here, at least the way we look at things going into the end of the year, we're definitely not going to get short as long as we're holding above this zone here. Clearly very well bid, right? And, you know, technically you'd expect any move down, you know, the highs from the election day to be support for the continued move higher. But we're clearly not going to be buying all these highs to try and move higher. So I think Dow is not that interesting here in terms of trading opportunities, at least for ourselves, unless you're trying to look at some kind of a pairs trade. But here, keep an eye that and any dip, as long as those highs from election day and these previous highs hold in support, will likely continue to grind higher, possibly all the way into the end of the year. So that's really the key bull bear line to keep an eye out for. Okay. In terms of the NASDAQ, again, we've been fairly bearish NASDAQ, but here, you know, the way this is trading, even if you look at this move, right, the question is, we're back pretty much at mid-range of the election day, right? And are we going to base here as it's trying to base? It's middle of this zone, this previous support here, and we're going to try and take a stab higher and follow the Dow, or is this broken and we need to go down? So I think the clues or the tells are still going to be around election day range, and as long as we're trading inside that, it's a very tricky call. But clearly, it's still going to have to deal with an awful lot of overhead resistance there. So it's a tricky one to sell. And here, keep in mind, yeah, once the ranges are so wide, once you've got so many wicks, it's really tricky to try and trade tight inside the range. So here, I think, you know, the bulls that bought the dip have made their bet, and the bears that are short from the highs have made their bet. So here, everybody is just going to be in a little bit of a wait and see. But I think there have been an awful lot of interesting opportunities, and there will be interesting opportunities around these extremes. And in terms of the ES, fairly similar in terms of action is that, you know, I think anybody who told you that they'd expected this to reverse so aggressively, you know, BS, right? So the big question is, the ES, which is our primary trading vehicle, is, do you keep on selling this because this has to break down because the NASDAQ's right, or is the Dow right and this is going sky high, right? I think here it's really tricky to make your mind up here and be too convinced of either direction. I think in any case, any kind of move back into this zone here and failure could be an interesting buy opportunity. And I think any move here is going to be an interesting sell. Tactically, that is, right? Clearly, if we trade above year highs and we get momentum, this is going to be very well bid, and they'll likely try to rip this higher all the way into the end of the year, right? Should we break the election day range and we break back below, you know, these 21s, 1990s, then it's going to be very difficult for this to try and catch a bid into the end of the year. So the big question is what to do inside this range. I think you've got very little edge in the mid, even trying to play tactical. So here is just be cautious. You've got an awful lot of overhead resistance down here. You're going to have an awful lot of support. Just be tactical. But, you know, I think, not to cop out, I think what the charts are pointing to, if you're looking at the candles, I think the way to look at it, or the way we're looking at it, is if you look at the candles, broadly speaking, and the technicals, these look bid, right? And most people are going to say these are going to skyrocket higher and these are going to continue to rip higher. The other way to look at it is those big candles on the election day. You know, there's an awful lot of uncertainty. Trump down, Trump speech, everything's okay, and the market still has to digest the whole Trump president-elect, and we'll have to see what comes out of Trump and his team, if indeed they're going to deliver or not, right? So you could almost argue that the technicals or those candles don't really mean that much, because all it's going to take is something on the wires to reverse it. So you're dependent on the wires. And I think what the market's clearly shown us is that now the way we're trading, if Trump continues to be very presidential, and if he continues to set up and pick a good team and lay out a really good plan, and everything seems to be like it's well oiled and everything is moving along nicely, equities will most likely stay bid. at the first sign of Trump being Trump in brackets, or the first sign of him backpedaling, or the first sign of something a bit tricky coming out on the wires, this is going to puke hard, and the velocity of the move is going to be very extreme, and that goes both to the upside and the downside. So I just be a little bit cautious here, and you really don't want to go chasing P&L at the end of the year. You don't want to go giving back your year in the last month and a half just on a lot of possible headline risk, right? So I hope that was useful. That's the way we're looking at it. I'm wishing everybody an awesome day, awesome rest of the weekend, wherever you may be, whatever you may be doing. It's already the start of the week for some people. I'll see you around on Twitter. As usual, thank you so much for all the support, liking, sharing, and everything. I'll catch you back soon. Have an awesome one. Take care. Bye-bye.